market. And again, for those of you that don't know me, my name is Melissa Armo. I own my own company. I'm going to talk today about gaps. I'm going to talk about shorting, even though actually we're in a long right now in Boeing because it had a big lift up right after Trump's press conference. I do go long and I do short, but I prefer to short, I will tell you. So if you're interested in more information, you can email me at melissathestockswoosh.com. You can call me at 929-3200-GAP. You can also follow me on Twitter, Facebook, YouTube, or Skype. Well, Skype's gone now, actually. I just realized that Skype is gone as of 2 days ago, I think. And you can watch me on TV. I appear on TV talking about the stock market, talking about the economy. Again, it's been a very, very interesting time to trade. And what I do is not specific necessarily to market direction, although sometimes I do trade the market. I'm looking each and every day for a stock that's gapping to determine the direction that I want to trade it. And we're getting into summer. And actually, summer is a good time to trade gaps, specifically what I do, because I'm usually in and out of trades very, very quick, early in the morning, fast. And the morning, I have found, is the easiest time to trade, where you get the biggest moves, where you get the swiftest moves, where you can get in, get out, and then you can spend the rest of the day to yourself. But when you trade, you really have one goal, and that is to make money. So again, everybody wants to do this. Everyone is interested in trading, but in order to make money, you have to apply a set strategy daily. That strategy has to be consistent. It has to have more wins than losses, because that's the only way that you're going to get ahead. And in this type of market, again, we've been in a very volatile market for 2025. You really have to hone it down to find the best pick, specifically something that you're going to do. And again, I do day trades and options, which I'll talk about today, but you really have to narrow down one thing a day. It will help you have less losses if you're more focused, and then also you will have larger winners. So whether you want to trade full-time, part-time, whatever the reason is you want to do this, you really want to have a strategy that you can apply every day. Because if you're listening to the news, if you have the TV on, even though I appear on television, and like the Fed talked yesterday, everyone has a different opinion about interest rates, where the market's going to go, if the market's going to make new highs, if we set the low for the year, are we higher, are we lower? Everyone has a different opinion of what's going to happen with tariffs. No one really knows, is the truth. What I do is fast trades, quick trades, where I'm in and out on the day, or if I'm doing options, I'm doing the weekly options, which is still to me a fast trade. Now, I did put the stats in here for last year. We are more than 4 months into 2025, which is shocking to me actually, but I did put the stats for the trading room for last year in here. 901,138 for last year. These were all day trades I took on margin. We had a 69% win ratio. So for every 10 trades you take with me, figure 7 are going to work, 3 are going to lose. That's what I'm usually looking at. And again, for the options newsletter, I take more risk. I am holding options overnight. And again, we did BA calls actually before today. We were in BA calls before this move up happened here today. I did like that chart, but I'm sometimes get out of my options trades in the same day, but I'm usually doing the weeklies. We had a good year last year, over 3.8 million, but I risk more because I want to take bigger size in my overnights. We had a 70% win ratio last year for the options newsletter. And then I put the stats in here for 2025 as well, but I just wanted to show you, again, if you took an advanced trader risk, what you could make trading options and day trades, same strategy, same exact strategy, over 4.7 million. And again, I have the stats in here for 2025. I have to update this through the last 2 weeks for May, or a week and a half, or whatever it is. This is through the 29th. 469,857 in the room. Again, 69% win ratio for the room. And over 2.1 million. We had a good start to the year for options. Again, we had a lot of volatility this year with options. And so we've had a lot of success with options this year, 76% win ratio. And just to let you know, Jeff, I don't know if anyone's going to ask questions. I can't see any questions. So I don't know if you have it open for me to see people's questions right now. I see no questions, just to let you know.
You will be able to see.
Oh, there you go. Okay.
Okay, maybe now. I just say you as an organizer.
There you go. Okay. Very good. Something about a danger zone. I don't know if that was the last presenter. But anyways, here we are. Okay, I see the questions. If you have questions, we're going long, you can let me know too. So again, start to the year, don't have the last week and a half in here, over 2.5 million, which we're on a better path forward for 2025 than 2024 because we've had so much opportunity. When volatility happens, and today we're rallying right now after Trump's talk this morning at 10:30, whatever time he started talking, rallies can happen up and selling can happen down, and you could call either one volatility because either way, volatility means what? Something that happens is unexpected. It's unexpected, and if you understand how to play that volatility, you can make money. But getting back to what I was saying, so far this year, it's been a good start to the year. There's nothing like making money to help you have a positive attitude. And for the most part, I've found, since I've been teaching people now for about 14 years, it really has to do with the way people think when they're going into their week about being green. Even if the amount of the green is small to medium, even if it's not a big, huge win that they have, people want to see the consistency in the green. Monday, Tuesday, Wednesday, Thursday, Friday. Trading requires a positive attitude. Where people are losing, they get negative. When people are winning, they get positive. And again, in order to become successful, you have to have a system. So I started trading gaps a long, long time ago. 2008, I started trading. I made a lot of money in a gap one day. It was Netflix. I remember it. I made a lot of money shorting. I said, this is what I want to do. I didn't understand what I was doing. I had no idea. I went back and forth for about 3 years till I developed my system and figured it out. I didn't know what I was doing off the gate, but I knew that I had something here with shorting. I knew I had something here with gaps, and we're going to talk about what gaps are in a minute. But, my point is that a lot of people lose money. They don't have a system. They want to blame themselves. Sometimes it is people that have a negative attitude, and they never make the right choice. But a lot of times people are trading, they don't have a good system. You have to remember that for every winner, there's a loser in the market. It's a zero-sum game. It's like that from the movie Wall Street. You're not really making socks or knitting sweaters. You're not creating a product when the money comes into your trading account. If I make $1,000 in the next 5 minutes, I didn't sell something to get that money. Like I said, like a pair of socks. I just took a good trade. So it's the smarter people win. The people that know what's going to happen ahead of time before something happens. So you need a good system to succeed. You have to follow it daily, and you can't veer off of it. Even if things are changing, even if you're in a weird time, like we're in right now, back and forth, the market's been in a tight range, you have to follow the system, okay? So for me, it's one, focus on gaps. Again, I do bullish gaps. Like I said, we're in BA. BA was a bullish pick, but I typically prefer to short, which I'm going to talk about today. Apple was a nice short we did. I was in puts in that, got out of that yesterday. I actually still think Apple's lower, despite the fact we're rallying today. But if you ever decide to come and learn with me, if you ever decide you want to learn my method, you will be very, very focused. Very, very focused. So I'm looking for fast moves, big moves. Again, volatility, which could be up or down. Here was the Apple one here. Again, I don't have in here the last 2 days, but we continued falling here. This was the 6th and the 7th was down in here. We came all the way down to like 193 and change yesterday. So again, let's go over what is a gap. A gap is a difference between the close and the open. Simple. So almost everything gaps every day. We'll say, well, how do you know what to do? How do you know it's playable or predictable? I developed a method to rate the gap to determine if I want to trade it, and if so, in what direction. Now, again, I was talking about Apple. So going back, this is Thursday, Friday last week. Apple had earnings Thursday night. Stock closed here, gap down, open, dropped. Okay, so we did puts actually last Thursday, which you could have got out of here, but they continued yesterday. And it had a nice little sell-off, snug as a bug, came down in here, broke 195. So again, this, picture the movement down, is selling. And again, momentum to the downside. Now I'm going to go all the way back here because these were trades we did at the time. It seems like a long time ago now, but this was not that long ago. Actually, it was only a month ago. Back at the end of March, beginning of April, again, Apple closed here, gap down. So what's a gap? A gap is a difference between the close and the open. Every day the stock market it closes at 4. Every single day. And every day it opens at 9:30, Monday through Friday. So this was a bearish gap. Open, dropped, closed here, gap down again. Rallied, fell. So again, this was a lot of volatility. If everybody remembers that, this was the tariffs. Boom! And then we had the pause, and then we had the lift. So again, this day was April 9th. Actually, that's a month. Tomorrow's May 9th. So again, this may seem like a long time ago and a long placement ago for where the market is now and Apple and a lot of other stocks. But the fact is that it really wasn't that long ago. It really was, like I said, it was less than a month. Tomorrow is exactly a month when this happened. So you're going to have this kind of volatility going on. You could say the reason is tariffs. You could say the reason is Russia, Ukraine. You could say the reason is the Fed interest rates. It's neither here nor there. I'm making my decisions. Again, this is a daily chart based on the daily chart, okay, to help me decide, do I want to go long Apple here or do I want to short it? And again, in the case of Apple, we shorted it and we did a put, okay? So anyways, right now is a very, very, very interesting time to trade. And you have to look, like, are you prepared for the future? What if we go into recession? What if we have higher inflation? What if the unemployment rate rises? Again, you've got to put yourself in a position to know what to do. A lot of day traders prefer to go long. I will go long. Like I said, we're long BA. But I prefer to short just because of the fact that I think shorting gives me a niche. But either way, you should know how to go long and short. Because if you don't know how to short, again, you're going to get caught in a situation, which happened a month ago, where you don't know what to do when we have selling come in. And in 2025, I mean, you see it in the stats for us here, it's really some of the best trading I've ever seen in my career. And I've been trading for 17 years. So it's like these types of opportunities, they just don't come around all the time, where you're seeing these big, big swings and big moves and big gaps. Again, you've got to be in the right stuff. You can't be in everything. You can't be in the market every single second. We don't play the market every day. But if you're getting it in the right placement, at the right point, in the right direction, you can really grow your account. And obviously, that's what everyone wants to do. So I developed a system called the Golden Gap. It's a rating system. It looks at 26 points in the daily chart. So I get up in the morning and I rate it. So how did I know Apple was going to fall? Last Thursday into Friday, I rated it. And this is what, if you wanted to come and take my class and learn from me, you'd learn. And so it's not something that's beyond comprehension. It's something I teach. Again, it's based on advanced technical analysis in the gap, and you would learn it and rate it. Now, you don't have to have a perfect score. We're looking for 20 points or more in the rating. So my rule is 20. If I get 20 points or more, I take it in the direction of the gap. If it's 17, 18, 19, it's 50-50 chance of working or failing, then I probably will pass. Okay. Now this was another Apple one that we did here. This was a nice trade. May 5th. Again, this feels like a while ago too. Stock close here, gap down. Again, this was Apple. Rallied, dropped. We shorted it, 203.30. Again, this was a day trade on margin. Again, typically in a day trade, I'm looking for $1 or more, trying to pull $1 out of it, 202.20. And again, you could have bought a put here. Again, we were in puts in this, but this was a margin trade that I did. Shorted it, got the drop, got out. It kept going though. I just want to show you. I got out of this at 202.20. It kept going all the way down here, broke 200, went all the way down to 198 and changed. Very, very nice trade, fast trade. Again, right out of the gate of the morning. Here's the morning. So I found that the morning, again, is the tightest placement to trade for stops, okay, to get the biggest position I could possibly get and the best entry. So again, what is a gap? A gap is the difference between the close and the open. Simple, like I said, but you can't always predict every gap that occurs. Stocks gap most every single day. Not every gap, though, is a good gap or what I call a golden gap. So I'm looking for gaps that are predictable. And again, how do I do that? I use my rating system. So again, this was the market. I'm just going to go back and show you here, again, to reiterate what happened a month ago. The market closed here one night, gap down. Again, this was April 3rd, April 4th, April 7th, fell and flipped. And then this was a tariff pause day where we had this big move here, but this really wasn't, this was what I would call a neutral gap here. We didn't actually have this whole bar, actually kind of strange as it looks right now. If you weren't watching it, you didn't know. This happened like at 1:15 in the afternoon. So this really was, there was no way to predict Trump was going to do that at 1:15 to do anything there. But this was predictable. This was predictable. This is just whatever. Okay. So again, but you can use this information and analysis to make decisions after the fact. Again, what is technical analysis? Looking at past price data to predict future price movements. That is what technical analysis is, okay? And again, charts have memories, just like human beings have memories. And every time I'm looking for a trade, I'm looking for momentum in the gap to make money. Again, Apple was a nice example because we were in that since last Thursday and had a beautiful, beautiful, beautiful drop into yesterday. So think about it. Again, momentum. Like if you short a stock and you have 1,000 shares and it drops $1, what are you going to make? $1,000. If you short a stock and you have 1,000 shares and it moves 10 cents, which I consider a scalp, you're going to make $100. So think about it. Which would you rather make? I'd rather make 1,000. So again, if you're scalping, you get a little move here, a little move there. Again, you have to do too many trades to make serious money or take too much size. And then even if you have one stop, then you have to take like 5 scalps to just break even on the one loser. Do you know what I'm saying? So you've got to get big moves. You've got to get momentum moves in order to profit. Because I mean, again, you could see back in my stats, I have some trades that lose. But like I was saying, the key to day trading stocks successfully is really using a system. So you want to trade a system that sets up daily with a high level of predictability in the directional move. There's no 100%. Nobody does 100%. It's like, again, people saying, what's the Fed going to do? What's going to happen with China? The China meeting in the next couple of days about the tariffs. Nobody knows. But you can look at the chart. You can make decisions based on the price reading of the chart with what I feel is again, around 70% win ratio predictability. And that's actually really high. But there is no 100%. If there was 100%, I could risk my whole account every day. And I don't do that, okay? So that's why I have to pick a size amount I want to risk in my trades. And again, I use stops. So trade a system that works independently of the market and does not need the market to work. And again, you know, we shorted Apple. That's something I still like. I still like lower, even though that's lifting today. It's best to do things where you don't have to worry about the market, particularly right now, because you can have the market gap up and fall, gap down and rally, or it could fall. I mean, the market's been like, you could look at the news alert every hour on the hour. Even today, you could be like, oh, is this going to keep going to 4? Nobody knows. So sometimes it's actually easier to trade stocks. Success or failure has everything to do with the quality of your system. And if you don't have a system, that's number 1. You got to get a system. Number 2, then you got to get a high win ratio system. And number 3, you have to implement the system, learn it, and do it. Okay? And then number 4, don't veer off of it, even if it's choppy, which I actually think the market's been choppy the last week. In my opinion, I think it's been choppy, but we've been in a very tight range. But again, getting back to what I'm saying, my niche is shorting for fast moves, get out. So if you can find a niche, something that you really, really get good at, then you can be profitable. And you can not only be profitable, you can have outstanding results. So I'm looking for reading institutional money in the market. But to be honest with you, it's not as easy as just shorting every bearish gap or shorting every bullish gap. Not all gaps are made with institutional money. It's one reason why people are very often confused when they're reading gap direction. It's not confusing if you review it daily and you have a process to read it. But a lot of times people want to trade gaps for gap fills. And that doesn't work consistently either, where you would short a bullish gap or go long a bearish gap. So I'm not doing that either, okay? So in other words, I'm looking for the technical analysis of what's happening in the chart, but I'm not doing the reverse of the gap. So when I rate it, I'm either looking to play the gap in the direction of the gap. So, and again, I'm looking for bearish gaps to short. If it rates 20 or more, I'm going to short it. If it doesn't, I'm not doing it. So Apple was one, like I was saying, that rated good enough to short. And so you could have shorted it as a day trade on margin or done a put. Either one worked, okay? And again, this is a chart of the market. Again, today we're up here. I don't know where we're trading at right now. But you can see here how we've had the lift. This is, again, the sell-off back in here from the beginning of March. We started out the year, it's not over here, but January, beginning of the year, we actually started out at brand new all-time highs. Started to sell off in February. Boom, boom, boom. So again, is everything clear, clear to the sky now? Is the market going to go back? Is it going to make brand new all-time highs? I'm on the fence here about it right now, to be honest with you. I wouldn't be surprised either way. I'm a wait and see kind of person here now with this market. So I'm not full on long the market. I'm in specific stocks that I like that are higher long. Dizzy's another one we did, had the lift up today. That was an earnings gap from a couple days ago. But really, if you're not focused on what's happening in the chart and you're too much playing the news, it's going to come back to bite you in the butt. And again, that can frustrate you. It definitely can frustrate anybody that's trading. I mean, again, you could have the news on the TV on all day long and hear good news or negative news, and you cannot trade on that. You have to see what's happening in the price. But like I was saying, my niche is gaps, and it's also shorting, okay? So how can I make money shorting? You make money when the stock price drops, okay? So who can short? Actually, anyone can short. You can open up a cash account with $2,000 and open up an options account, and you can buy puts. You have it set up as a cash account. You can open up a day trade account, a margin account at a prop place or at a retail place where you need $25,000, and you can short stocks with 4-to-1 margin, or again, you can open it up prop, or you can open up an account with $5,000, and then you'll get 10-to-1 margin. But anyone can short. Professional traders short, lots of people short. And again, it depends how you want to take the trades. If you have a retirement account and you want to trade that in options, you cannot short it in a retirement account, but you should be able to buy a put. So I have some people with me that are trading retirement accounts and they're buying puts. Okay? Any questions here so far? How are we doing? I don't want to go too fast here. We doing okay? Okay, very good. So, selling happens fast, all right? And typically, it's done early in the morning. Well, here's another Apple play. We've been doing this a lot. I've been very interested in shorting this, actually. So this was 4-3 we did Apple. Here. Stock closed here, gap down, open, dropped, fell, entry 203.70, exit 202.60, dropped 27.50 was a profit, 2,500 shares, risk was 4,000. Again, this was this little tiny day here, okay? So again, stock closed here, gap down, open, rallied, we shorted it, got in, got out, done, boom. You could have also done it here in the 4th. Could have done it there too. We did this again on the 17th. Again, closed here, gap down, fell. Closed here, gap down, fell off a cliff. I've really been liking this. I didn't realize how many trades I've done in this. And again, NVIDIA is rallying today. This had news out, the market's rallying, but we did a bunch of shorts in NVIDIA. 103.60, we shorted it. Exited 102.90, made $2,800. Again, if you don't have a margin account, you can buy a put. But again, just want to review, this is a gap. Stock closed here, gap down. Stock closed here, gap down. Stock closed here, gap down. Boom. So again, you could have done this a bunch of different times. A bunch of different times here in the last month. That was the middle of April. Any questions here so far? So here we are. We were talking about day trades. We're talking about options. So like when I do an option, this is one of the Apple puts we did. I called 328. This is when I sent the trade out. It was 11:45 in the morning. Typically my trades are sent in the pre-market. But on 328, I called the Apple 215 puts that expired 4-4. So let's go back to the Apple chart, 328 here. So I just want you to see this. So the stock closed here, gap down. We did puts. They backed up. So I was down in the trade, and then they fell. So again, in order to make money shorting, a stock has to drop. How does a stock drop? Selling or shorting, but it's mostly selling. So the best shorts we get are actually mostly selling action. This was one of the biggest trades we've had this year. So I was in the app. It's funny that I'm still interested in this now that I think about it, because this was like a month ago. It cost $1.80. I did 50 contracts. Risk was 9,000. Sold at 22, which is absolutely insane. And it was $101,000 profit, or over $1,000 return investment. Now, it is not always that I will hold a trade into the last day of expiration, but I will show you how far this was in the money here, that I felt like this was like there was no way I could lose in it. You could have got out of this here, and it was a huge trade, though. You could have got out of it here, it was a huge trade. But I actually felt like there was no way this wasn't going to go against me here. So when this closed here in the third, and it gapped down here, I didn't know exactly where it would go, but I felt a very high level of conviction to stay with the trade, and it paid off. Okay. So again, what if you did, $1.80, and you took just a small risk, and you just took, or even a medium risk, say you risked $1,800. Say you took 10 contracts, okay, and you risked $1,800, you could have made over 20 grand. So these are the types of trades, again, here was the trade, that really can make someone's whole account for the entire month. And you get a couple of these in here, and you're raring to go. So again, it's not just about having a 70% win ratio. It also is extremely important to have some really big trades. So back when this was all happening here, I was starting to feel like the market was going to fall off February, March-ish. I didn't know exactly where or what would be the precursor for us selling off. Like, nobody could have predicted what happened with tariffs. But we got that drop, and we were already in trades when that gap down there happened overnight. And a lot of people say, well, how do you know it's going to happen? How do you know it's going to... You don't know. You pick the right stuff, and you rate the gap, and you follow it through. And I don't kill options in the middle of the trade, and they're just going to normally happen. So again, that's what you have to do. Like, we've been in BA for a couple of days. I didn't know that Trump was going to announce anything today about BA, but it was a good pick. And then it ran up today. And that's actually a trade that expires tomorrow. So again, when you're looking to do something, the chart really tells you everything you need to know. You don't need to know the news. Lots of times the news, either you don't even know it, and then something comes out, you say, oh my God, that's why that happened. That's why that did that. And then you find out after the fact, and you see it in the chart first. It's always in the chart first, okay, is my point. And that's why you have to follow the chart. And again, short moves happen very quickly, very fast, which is why I prefer to short. I also prefer to short, like I said, because a lot of people do not understand shorts, don't do shorts. They have absolutely no idea what to short, where to get in, where to get out. People are scared of shorting. I don't know why. I love shorting. But again, panic comes in very quickly in a stock. Panic will come in fast, and it's the fear factor. It's not like you can't get panic buying. That can happen. It's rare, but it can happen. But usually you have panic selling. Okay, so panic selling is something that happens on a more frequent basis than you ever have panic buying. Like, think about it. If you're thinking about buying a stock right now, you're like, well, it's been down for a month or so. Maybe I should get in here. We might make new highs. What if we drop again? You know, we don't know what's going to happen with tariffs yet. We could go into recession. Maybe I'll wait. Like, there's no emergency to go long. There's no panic about going long. Like, if you don't get in now, you're going to miss it kind of thing. I don't think a lot of people feel that way about anything right now that's bullish. But you do have panic to the downside. You do have panic to the downside. And that happens all the time. Again, it happens most every single day. So how do I find the best shorts daily? And again, how do I make the best picks? The Golden Gap rating system, which is the system I developed. So I'm looking for large institutional money, which again is kind of been on the sidelines here since we had that that pause. We've been back and forth in a tight range. Gaps are created with large institutional money. That is what makes the gap. The professional gaps that happen and play out in stocks are formed by one thing and one thing only, large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap and then confirm that the large money will flow with it. So again, it's just, you're looking, let me just go back here to this Apple chart. What occurred here, even this week, even the last couple of days or whatever since the earnings, it got dumped. It was dumped. And again, I don't have these last 2 days in here, but this kept going. So institutional money dumped it. Boom. Like that. Again, how do you make money shorting? Something has to go down. You're not going to make money shorting if it goes up. Okay? So you have to get selling. Okay? And again, you have shorts in here too, because again, we've been short. But again, getting back to the whole thing, what I'm saying about panic and selling and institutional money is just so important in it. So again, how do I figure this out? I do it all in the morning in the pre-market before I even take a trade, before the market even opens. I'm looking at what to do. It could be 6 o'clock, could be 7 o'clock. 8 o'clock is late for me to sit and get organized, but I'll do it early, way before 9:30. The Golden Gap 26-point checklist is a trading system. It's based on common sense. Because again, when you think about it, you're like, oh yeah, that totally makes sense that panic happens and people dump stocks. That's what happened, like I said, a month ago. Or it could be again because of news. Could be again because of earnings. Okay. But I have found in 17 years of trading that shorting gives me a niche because people get scared. And again, a lot of traders don't know how to short. They just don't even have a clue, or they're just prefer to go long. Again, the idea of buying dips is not something that I've ever done, because it's like if I was standing on top of my building and you were standing on the street, if you're on Fifth Avenue, I live in New York City, and I stood on top of the Empire State Building. I said, here, catch this. And I would throw a knife down. Would you want to catch it? No, you would not want to catch it. And so, I mean, that's dangerous, okay? You could get cut, hurt. So again, I'm not buying stocks when they're selling off. And again, I'm not buying anything when panic's coming into it. Any questions here so far? How are we doing? Hello, is anyone there?
We don't have a lot of questions coming in, but yeah, I'll let you know if we do.
Okay, good. So, anyways, what if you have a small account? Can you still short? Again, you can buy puts with a cash account, which you can open up an options account with $2,000. You do need a margin account to short stocks on margin, and you would need that to go long stocks on margin too. Again, in your retirement account, you have to check where you have it, if you can trade options at all, and if you can, you should be allowed to buy puts. But specifically, if you have a small account, that's one of the reasons why you need a good system. Because again, if you have a small account, and by small I mean, I'd say under $10,000, you can't have a lot of losers. You don't have a lot of wiggle room. You need a system that has more winners than losers, okay? So getting back to what I was saying though, you can use a system to trade options, and again, a put option is a short. And it's a way to, I say it's like the insurance where you can hold a trade overnight and you have a fixed risk. So if I buy a put, say it costs $5, you do one contract, it costs $500. That's all you're going to lose if the trade loses. Whereas if you're shorting stocks outright and holding overnight in swing trades and you're on cash or even 2-to-1 margin, you still have unlimited risks. In options, you have a fixed risk. So one of the biggest benefits of doing options, I think, is not that you can trade them on a cash account. It's that you can hold them overnight. That's one of the biggest advantages, I think. Not that you can trade them with a small account or anything. It's that you can hold them overnight, because this time of move here, like we had in the market where we were already in puts, this is like just, I mean, these are just beautiful moves. This is, again, volatility. It worked in our favor. And again, this is not a margin trade. This was a put. Okay. So this is the advantage of doing options, where if the trade would have gone up here, which it didn't, and we were in puts, if it would have, we would have lost in it, we would have had a fixed loss. So again, you evaluate it and see if it's worth the risk. And again, we did these trades on here on the 28th. So here was another one we did. This was 328. We did the 475 QQQs. It expired the 4th. I'll go back and look at the chart in a minute. Some of these trades in the market have been pricey. There are daily options expirations. I do not do this, but this was another, the 28th we put a lot of puts on, which was a great timing. Right before that sell-off, I saw something was going to come in. 18 contracts, risk was 9,000, sold at $45, profit was 72,000 or 800%. Again, you could have bought one, you could have spent one, the amount for one, you could have spent $500. And it was a really, 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 really nice trade. So again, here was the 475s we did here. Again, closed here, gapped down. We bought the put, fell, backed up, got the drop, 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 boom. So again, this was the Friday. Remember, then this was the 4th. And then this was Monday here where we had another gap down and we flipped. So again, you could have done one, which anybody should be able to afford, $500. Here's another good chart. Amazon, we've been watching this one too. This had earnings last week. We did the 195s. Again, we did a bunch of puts on the 28th. It was perfect timing. We did the 195 puts, cost $320. Again, one contract was $220 risk, which anyone should have been able to do. Sold it at 21, profit was $53,400. Again, 556% return investment. These are the types of trades, again, like I said, that can really make your account. My normal trades, I'm looking for one-to-one. I'm trying to get one-to-one, but if I get real big momentum coming into something, or if the gap goes in my direction overnight, that is how I'm making more than that, okay? But again, the rating system looks at 26 points in the daily chart of a stock. The rating system is a checklist. It's a tool. It's a very, very useful tool to help me decide what I want to trade, where, and when. And the checklist tells you what to look for in the price of the stock to read direction. And again, you can't short everything that's gapping down, and you can't go long everything that's gapping down, and vice versa, okay? It's not that easy. If it was that easy, it would be easy to trade. Again, one of the reasons that the stats are stacked in the favor of people that make a lot of money that win is because of the fact that there's more people that lose than win. So again, the people that do win a lot. And so you want to be on the side where you're winning a lot, where you're winning more than you're losing, and then you're also getting the big trades. So like I was saying earlier, having a positive attitude is extremely, extremely, extremely important. It will help you through the tough times. If you have a trade that loses, which I have trades like I showed you in the stats, I have some losing trades. When you know that, 7 of the next 10 trades are winners, you keep moving forward. And then you also know that you've had some big winners and you're going to have some big winners. But, education is extremely important. I just taught my class for May this past weekend. It's just one of these things where it's an eye-opening experience for people that come to me. That if some, most people have been trading for, that I teach for a long time. Some are brand new. I've taught brand new people. But if you get the proper education, you can do well. I think people go through the process, they take classes, they learn different systems, they don't make money, and then they start to feel negative about education. But the fact is, if you want to learn a good system, you're going to have to learn it and understand it. When you're risking money, your own hard-earned money, you want to understand, why am I shorting Apple here? Why am I shorting anything if the market's rallying? You have to understand why. And again, if you understand why, it will help you put on the risk. It will also help you hold the trade to get some of these big profits, okay? You can't be just taking calculated risk for risk's sake. You can't be taking every trade in the direction of the market. You can't be trading on news. You can't be buying every dip and expecting to have a high win ratio either. And it's not about risk for risk's sake. You have to look at each trade separately. Each chart is different. You're evaluating each ticker symbol, each gap, each one on its own. And the whole reason I developed the system in the first place is because I was looking for calculated risk. because I didn't want to lose. So I said, well, if I can find a way to find just one good trade a day that I have high odds. Again, there's no 100%, but I'm trying to put the odds in my favor. So if I go through 26 things, it's a lot. If I get 20, that's a lot. So again, the higher the rating, the better the chance of the gap working, or the bigger the move. So I'm always trying to look for something that is giving me a reason to do it, okay? And then you can create a plan of action for you to achieve your financial goals, whatever amount of money as you need. I mean, a lot of people start out with a small account. You can grow it. You can grow it. And I showed you a couple big trades we had here in the last month. You can start with a small amount and build it over time. And again, many people are doing this part-time while they have another job, working towards being able to trade full-time in the future. But my system is a rating system. This is what you come and learn in the class. I'm looking to measure gap by rating them a daily chart to find stocks to trade that have, number one, a high probability of directional bias for the entire day, big move on the day, early confirmation of the bias and the move between 9:30 and 10, precise entries with follow-through, and a good risk to reward target potential. Again, it's essential to have a good risk to reward because, again, if you're looking for 5 cents, 10 cents, 15 cents, you have to take thousands of shares to even make any money at all, and it's just too much risk for too little gain. So we're looking mostly trying to get one-to-one. So my system is called the Golden Gap. The Golden Gap system is a 26-point professional gap rating system. The purpose of the system is to help you evaluate which gap to trade each morning using a checklist. This checklist tells you what to trade when and in what direction. The 26-point checklist predicts directional bias in a stock chart. So again, what I've been stressing here the entire time is how important it is to have a system, how important it is to have a winning system, and how important it is to have a winning attitude. One strategy is all you need to be successful in the market. You do not need a general, overall, broad-based view to make money. Tons of people have that, and they fail all the time. You can't be a jack of all trades and a master of none. You've got to really narrow it down for one thing. And again, it could just be shorting. I mean, because that's what I mostly do. Even though I will go long, I'm mostly shorting. And in any market conditions, even in a bullish market, learn how to read institutional money and price patterns in gaps, and you don't need to do anything else. Because if your reason for doing this is to make money, this will make you money. So again, if you come and you decide you want to take my class and learn from me, you will learn a 26-point checklist that you will go through each and every day for everything you want to rate. So this is what I do. This is my process. I never skip it. I don't trade on the fly, because that's very, very dangerous. So my class is called the Golden Gap Course. This is a class on how to find, pick, and play professional bearish gaps. Class is online. You can be anywhere in the world and take it. And I teach it once a month. So again, I just had the May class. So it is earnings season right now. We've had tons and tons of earnings. I brought up Disney. We traded Disney. Disney was an earnings gap that we did calls in. So you will learn, it is a class on how to find, pick, and play professional bearish gaps. Class tuition is $69.99. Class is June 7th and 8th, 9 a.m. to 5 p.m. Eastern Time. I always teach the class online. It's always on a weekend. And again, if you're interested in this class, you can email me. I am doing an earnings season deluxe package for people that are interested in starting to trade now, getting the trades tomorrow, getting the trades during this earnings season. If you sign up by Friday, which is tomorrow, 5/9, I've been running this special for a week here now. I'm doing a package for everything. That you would get the options newsletter subscription free for 1 year, the trading room subscription free for 1 year. You'd have access to the trading room. You get all my trades for a year that would take you into May of 2026. The market report subscription free for 1 year, 2 one-hour mentoring sessions with me one-on-one, and the wealth manifestation course free. If this is something you're interested in, this is going on till Friday if you sign up for the Golden Gap course bundle. And this gets you 3 classes. So you would do the main class, which is the Golden Gap, which is 2 days, June 7th and 8th. The Trends course, which is June 11th. And then 10th, I'm sorry. And then the Gap Options course is June 12th. So it's 3 classes in the bundle for $89.99. And if you sign up, you get the deluxe package. And this is going on until tomorrow. Any questions from anyone about anything at all? I think I'm doing good with time. Quiet group today.
You're doing great with time. What we do have a question in terms of, you talked a little bit about options.
Mm-hmm.
Do you have do you have recommendations around what options somebody should pick in terms of like expiration dates, in the moneyness, delta, that kind of thing?
I'm doing usually trains. I'm doing if I can get it close to at the money. And I'm also doing the weeklies, like today's Thursday. So I'm not going to do anything I would want to, like if I did something this afternoon, which I don't think I'm going to, but if I did, I wouldn't do tomorrow's expiration. I would do the 16th. I make decisions on the trade if I want to go long or short based on the direction. And again, a call is a long, a put is a short in an option. So I'm not looking at delta or any of that. If I see the momentum's going to come in, then I'm taking the trade. Again, we did the 190 BA calls, but I've been in them for a couple of days. They've been back and forth, but they really didn't have any momentum until today. And they expire tomorrow, so we made it. We made it, and it was a nice trade. But I was looking for momentum to come into BA. So I'm always trading the momentum. So I'm not really looking at the delta. I'm making the decision based on the gap rating. If the gap rate's 20 points or more, I'm going to either buy a put or buy a call and then trade it till it goes. And if the trade loses, if it busts out and loses, then I'm going to lose in it. And then I lose in the trade because it never went. Do you know what I mean?
I do, yeah. We also have another question about whether this is applicable for gaps in the futures market.
Well, again, if you are trading futures, which I don't trade, okay. First of all, a lot of people are crazy into futures this year in 2025. I've heard good stories. I've heard horror stories. I've had a bunch of people call me that want to sign up for my class that are doing futures and they're losing and they're getting tired of it. Futures right now with the market, which gaps almost every single day, again, based on news, it could be at one point at night, the next point in the morning, has been challenging for people. Again, a lot of it has been news-driven moves in the market. And when I say the market, I mean the QQQs or the SPY. If you apply the rating method to the indice, for example, in the QQQ ETF, you would rate the gap in the QQQ and then you would trade it. But you would rate it and then play it as it comes in the direction. Again, if it's a bullish gap, you would rate it to go long. If it's a bearish gap, you would rate it to short or buy, to short it. But I mean, again, for some reason, and I was talking about this the other day with my broker, people are driven towards going towards the future market because of the fact that if they don't have to risk as much money as trading stocks, specifically for trading on margin, you can open up a smaller account. But again, you can lose big if you're not hit right on the money. I would tend to say to people, could you rate the gap in the market and trade futures? Yes. Are you going to get a trade every day? No, you're not. Because the market isn't predictable or tradable every day. You will have more trades. You will have more trades and more opportunity if you move into trading stocks, whether they're options or again, stocks on margin. So I think anybody that comes to me, if they have in their head that they want to rate the gap in the market and do futures, will end up gravitating because they'll be like, oh my God, I could have shorted Apple. I could have bought a put and I didn't do it. And again, people are losing money doing futures in the last 3 weeks. It's been very choppy to trade the market. And I don't trade the market every day because it's not a good gap every day. Do you know what I mean?
I get you. Bill wants to know, how could you see a gap coming on Apple before it came?
I didn't see it before it came. I played it when I saw it. 328, Apple gap down, and we did a bunch of trades. We had a gap here last Friday. That's when I entered the trade that we did that I exited yesterday. I'm not predicting the gap itself. I'm playing the gap when I get a good gap that rates good. So I'm not predicting the gap. I'm predicting the directional bias after I see the gap. Like for example, tomorrow's Friday. I didn't look out to see what earnings are out tomorrow or tonight. There's a ton of earnings right now. It's earnings season. That's why I'm doing the earnings season package. There's tons of things to do all the time. A million things. We did Disney. Was I in Disney before the earnings? No, I wasn't. I wasn't long it before the earnings. I didn't even know what it was going to do at all. I don't take the trade before earnings. I don't predict the gap before it gaps. I would be a psychic if I could do that. If I could do that, I'd be a billionaire. So it's just, no, I'm seeing the gap. But I have developed a method once I see it and I say, wait a minute, is this going to continue in the direction of the gap and fall, which is what happened with Apple from Friday on, or is it going to rally and fill the gap, which is not what happened. Okay, so just to be clear, I'm not predicting the gap. I'm predicting how the stock's going to move after I see the gap.
Okay, that's the end of the questions that we've got. So the email to send an email to get ready for that June 7th course, right?
Yeah,
June 7th and 8th.
Yeah, Melissa at thestockswoosh.com. If you want to email me, if you want to call me with questions, my phone number is 929-3200-GAP. I'm a real person. I live in New York. And again, it's been a very interesting time to trade. And we've been very active. Like, I've just been like trading like a banshee lately. So it's just like, it's like now is the time to trade because it's earnings season. Again, we'll have a break over the Memorial Day holiday. A couple of days it'll be slow. And then we'll be back chomping at the bit. And then remember the tariff pause. That'll be at the end of June. So that'll be like, there's so much going on right now. There's so much going on. There's so many things to do. There's so much opportunity. But as for every trade that you could take that you could make a huge big winner, there's a million you could lose. So you still have to narrow it down and 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 narrow it down. It's like finding a needle in a haystack, but you can do it. You can do it is my point.
Right on. Thank you very much, Melissa. I
Thank
appreciate
you,
you being in here and spending some time with us.
Thank you. Have a good weekend.
You too. All right. Let me go ahead and do this. Melissa at thestockswoosh.com for that.